Let me know if you guys can hear me. I couldn't get the mic to work for some reason. Yes, this market is pretty bad, man. Pretty bad. Low volume calling. Let me know if that's better. No, it didn't change. Alright, let's see here. What about now? Is that a little bit better? Echoing. Bummer. Okay. Let's see. Mic is too loud. Okay, what about that now? Is that better? Oh my gosh, that's probably why I'm echoing. Hold on. Music down, just a little echo. What's up, Jonathan? Oh, Jonathan, what's up, dude? I haven't seen you in a long time. Or, well, on YouTube at least. In the Discord or anything. Let's see. Alrighty, is that better? That should be better, but if not, then I really don't know what to do. Oh, there we go. Sorry guys, this is like my first time going live. Way better, thank you. Okay, very good. What's up, Colin? How you doing, man? Look at this, guys. This is so disgusting. Like, that's bad news. The daily, at least the 4 hour, it's getting close to the 200-day moving average, or the 200 moving average. But I mean, breaking critical support like that, you know, 45, 46, the previous high, is pretty bad. We're probably headed to, you know, the next level. I mean, that's where you're headed. What is that? 44, 68. And if you don't hold there, you know, 43.68, but look at where the 200-day moving average is, you know, so far away. And the last time you tested the 200-day moving average was clear back here, you know, right after the COVID crash in June and, June. So, you know, I think this is just the beginning. You know, I'm not trying to scare anybody, but, or, you know, make it seem like, you know, the market's going to crash, but that's disgusting. That is disgusting. Oh, yeah, Big Sean, okay. You know, guys, it's first, you know, you have the gap down, the just disgusting candle, and then, you know, attempted rally. That's bad right there. When you have the wick on top, no wick on the bottom, you know, buyers tried to push the price up, sellers push it back down. You know, you can't make a high, you know, and you close below the high and you get wrecked. So, You know, you have the hangman up at the top, or I mean, I don't know if that's a hangman technically because the wick on top, but you know, double top, really bad, guys, really bad. You know, the 50-day moving average blew right through it, blew right past the previous high. Clear, you know, bearish divergence on the daily on the MACD. I think, you know, right now we're currently sitting at what on the RSI? Let's see here. 37.49 on the daily. Yeah. And so technically we're, you know, right there in the bearish control zone. I could see, you know, the SPX definitely seeing 44.6 at the minimum, potentially even, you know, 43.85, and you break 43.85, you're back to the 200-day moving average. But that would be the ideal, you know, ideal place for a, you know, for a long position, you know, at a major inflection zone. Currently at the, you know, 50% retracement from the low to high. You know, so you're at a moderate retrace. You know, a lot of times assets like this will make a deep full retrace. You know, to the 886, 786. You know, and we're about halfway there. Well, two-thirds or whatever. But yeah, what's up, Kramer? How you doing, bro? Hope everybody's doing good today. One thing I want to kind of point out that I thought was super interesting is if we take our, you know, our fibs from the previous high to the low, like look at where the reversal happens, like dead on the 1618. You know, crypto, they, you know, assets run, they break through the 1618 and they just keep going, you know, keep going and going and going. This is an index fund, you know, so it just is so much more technically on point like that. So, you know, pretty cool to see that. Let's jump over and take a look at the, one other thing I wanted to show you. If we jump over to like the 3-day, I mean, guys, it's bad all the way around. You know, usually when you can jump up to those significant time scales, you know, sometimes it'll look a little bit better, but you know, you're down 4.86%, and to get to a, you know, quote unquote correction, you know, 8, 9, 10%, you know, 8%, which would 7.85% would put you dead on, you know, that major level where it back tested, where it broke the previous all-time high, back tested it before running to the all-time high and pulling back. So shorting an individual stock, I think is not a bad idea in the current market conditions if it's technically set up right. I don't even think, you know, necessarily shorting the index fund is that bad of an idea. You just got to be careful, right? You know, you want to find a technical setup. You know, you want to find a strategic entry. You don't want to just, you know, short it right in the middle of a range. The one thing I will say with the index funds is, like, how many times have we seen this type of stuff and then it just pivots and keeps going? You know, so it, you know, money printer isn't going burr anymore. So, you know, the Fed comes out, talks about, you know, tapering potentially happening faster than everybody expected. We all knew tapering was going to come, you know, but now it's faster than expected. I hate that they keep calling inflation transitory because it's, in my opinion, we are going to have a rough year in 2022. That's what I think, at least. But, you know, who knows? I could be totally wrong. But yeah, what I was going to say is finding like those triple leverage, you know, inverse ETFs. Like I've got a couple here that I was looking at. You know, the SQQQ, the triple leverage, you know, inverse ETF. So those aren't bad because, you know, they're so bottomed, you know, they're so bottomed. I think when you look at a mixture of like how overextended the index funds are, inflation, you know, printing money, stopping, bond tapering, you know, faster than expected, supply constraints, the time of year. I think it's just the new Omicron variant. I think it's just a perfect storm to see the market get wrecked, or at least pull back a decent, considerable amount. I wanted to look at the weekly on the SPX. But yeah, I mean, look at just how perfect, you know, straight up, you know, you get your doji, hangman, whatever you want to call it, you know, at the top, and then straight dump. That's the weekly, and we just painted a new weekly, what do we've got here? What's that, the weekly? 1 day, 21 hours? That can't be right, is it? Maybe. NASDAQ actually, you know, breaking critical support as well. Same thing, break the previous high, and you've got a long ways to go on that one as well. I think you could potentially see the NASDAQ stop at about 14.9, like right there at this previous, you know, initial candle high or all-time candle high close right here. But I think the major level is like 14.755. So look what happens, guys. I mean, you break critical support. You know, you look at this stuff right here. You drop down to like the 4 hour. This is when you know there is no strength. This is when you see a lot of distribution happening. Obviously, this is a really choppy looking, you know, inverse or head and shoulders. But I mean, when you have the left shoulder make a rally, pull back, dump, which look at the strength back here on the right or on the left shoulder. When it pulled back, it didn't even have enough, you know, buying or selling power to pull it back to go test the initial all-time high. So a lot of strength here in November, and that's why it rallied past the all-time high to create the head, right? But then when it tried to create the right shoulder, you couldn't even make it up to retest and create an equal right shoulder or right shoulder as left shoulder. So ton of distribution going on, guys. When you start seeing stuff like this where you get your one top, second higher top, and then you get your, you know, your right shoulder that's like all slanted down, that's disgusting. And then you break the neckline, break critical support, you know, you blow right past the 50-day moving average, and you know you're at least getting close to the 200-day moving average on the NASDAQ on the 4 hour. But well, I guess it was the same on the SPX. But look how far you've got to go. If it doesn't pivot right here, and you know, and start moving back up, you're probably gonna see, you know, 14.755, which again would be, you know, 3.28% to go, and you know, 9% total. And so, you know, that's a correction, you know, that's about a typical correction. So I just recommend, you know, just strapping in. This right here, guys, is bad, but it's all about the follow through price action, right? It's not necessarily what happens, it's what happens after the fact. So, you know, this thing could, like I said, pivot here and, you know, create an indecision, and then the next day, you know, blast off and just keep rolling. But I just don't think it's very likely. You know, don't think it's very likely at all. So, but, you know, again, bearish signals in bullish, exceptionally bullish trends sometimes underperform, but we'll see. Negative momentum still building, you know, no sign of it starting to wane. I mean, look at what this thing can do, you know, build, start to lose a little bit, build. So, I just think looking at those inverse, you know, ETFs isn't a bad idea. You know, again, 40, you just got in the bearish control zone on your relative strength index on the daily, on the NASDAQ. And if we jump over to the monthly, yeah, I mean, look at that, like textbook perfect, literal perfect shooting star. I think sometimes they call that a dragonfly doji. They got all sorts of names for them, but I mean, you know, bullish engulfing candle in October, and then November, you know, that's bad sign. And then now you're already painting, you know, follow through. So obviously you got a long ways till that closes, but the weekly bearish engulfing candle, instant follow through price action, that closes in 1 day and 23 hours. So unless this thing makes a major turnaround, it's definitely could keep going. So, and you just started to build your first bar of negative momentum on the MACD. 55, got a long ways to go, guys. The Dow is looking really bad. One thing I will say about the Dow is you are way closer to your inflection zone than the other index funds, but you just blew right past the 200-day moving average. So again, building positive or negative momentum, 27 on the relative strength index. At least this one looks like the bottom's a little bit closer. So let's see, from low to high, 7% down. Just made like an 88% retrace, I bet. Yeah, see, the 886 is like right there. So who knows? We'll have to see. The Russell 2000, absolutely disgusting. The Russell 2000, that was looking so good right there. I mean, you had the range that it was in since clear back in, February this year, starting this year, just couldn't get out of the range. And then you have like a textbook partial decline. Like, this is, yeah, sure, it's down a little bit too far, but this is like a textbook Bulkowski, like partial decline, confirmed. When it broke out, it just couldn't back test it. If it would have been able to back test this zone, it could have, done really well. But that's the Russell 2000. So small caps are getting wrecked. The DXY though, I mean, so unbelievably hyper bullish there for a while. I mean, big bullish shark pattern. Found a bottom, not once, not twice, double bottom, confirmed double bottom. Broadening formation, and then just, take off again. Partial decline, pulls back about halfway through the structure before running, and started to top out, which was almost right at a pattern completion zone of a bullish or bearish butterfly, but technically this asset still could go to the 1618 right there. So the DXY, the dollar, could still keep going. I mean, it could absolutely see $98, which you got to break that 97, but historically, anytime you break that 97, straight up, straight down, straight up, straight down, straight up, straight down, straight up, straight down. So it's crazy to see the US dollar like that. Whoa, earn money, invest, dude. Thank you so much. That's my first tip ever. I love you. Seriously, wow, thank you. I really appreciate that. I really appreciate that. That's so sick. Like, wow, thank you, dude. I did not expect that. You're the man. Thank you. Is there anything you want to look at? I would love to look at something for you. If we take a look at some of these triple leverage index funds, you can see this is the Russell 2000. I mean, just, big days, pulling, positive momentum right out of the bullish control zone. So, I mean, Mickey, these could be something that you could take a look at. Again, just be careful. But one thing I wanted to take a look at was the VIX. Like, look at the VIX. So ridiculous. Algo, yes, dude. Yeah, absolutely. Absolutely, we'll take a look at that. The VIX, you can't really, I mean, it's too hard to map out like any support resistance. I mean, you can, but it's just so choppy. But that's what happens. That's what happens. You get the momentum shift, you break the 200-day moving average, and then it just moons, and that's when the market dumps. So, but yeah, let's jump over and take a look at algo. I think I have that on my list right here. And then we'll take a look at a couple, oh shit. Here we go. So I really like algo. I really like algo right here. This level right here, this 184 to 179, anything above that, I love it. Anything below it, not so much. Not so much, because anything below 184 is pretty much, call it 154, right? Because anytime it breaks this inflection zone, it goes straight down to 184 at least, or 154, excuse me. 154 at least, which, again, the initial all-time candle high close was like 170, but it just blows right through it, so there's not even a point of even having that line there. But let me show you the 4 hour. So this was like incredible right here, right? So back here in October 2021, this bullish bat pattern, call it a bullish Bartley, it made a 61% retrace on B, X to A to B, but then it made an 886 on the C to D leg. right after that, you had instant follow through price action with the 3 rising valleys, and you pretty much broke your structure. So you had your first valley, second valley, third valley. You break your structure, but you just couldn't hold that on the check back before finding support again, having another rally, which anytime I think you break above that like 205 level, you could see 256 like real quick. I mean, look at back here. It runs, it back tests it, and this zone right here, can be very volatile. I mean, you saw right here, it broke that. Now, man, granted, this wasn't intraday like scam wick that was insane, but that's what this asset can do when it gets above that 205 level. So I really like it right here. I like how the whole rest of the market, crypto market at least, has not been doing very well. There's been a couple assets that have been overperforming, but a lot that have been underperforming, and this has been outperforming a lot of assets. Undeniable long-term uptrend. Outperformed a lot of the big cryptos. On the 4-hour, let's see. I haven't looked at it for a little while, but no necessary edge at these current levels, because I mean right now it's up 4% today on the new day. It's already up 4% on the new day, and yesterday the candle just closed like a couple hours ago, it was up like 8%. So not a lot of action to take here. I think right there that again 205 level, you break that, look for a back test of that level, you could make some serious moves. I think your target after that, let's go from our high to low. You're right at the 50% retracement right there. So, I mean, your target ideally would be up here at like the 786, 886, but I would shoot for the initial all-time candle high close, which would be confluent with that wick right there. So like 230.83 would be what I would say. So I like algo, just nothing really strategic at this point in time. Yes, I did see Luna. Luna is just insane. Up massively today. Look at that thing. Just huge outperformer, guys. Huge outperformer. It actually wasn't looking that good until, it pivoted and took off. But, bullish Bartley made 886, first low, which, reaction low, second confirmation low, before just going absolutely insane. And what's crazy is it didn't even have enough selling power to bring it back to like the levels. So nothing to do on it now except for look at it and say, wow. So yeah, I'll show you a couple that I like right now. This SRM, honestly, don't even know the name of it, just know the ticker. But big textbook, I mean literal textbook bullish Gartley at a major level. I mean, you can see here, anytime resistance pulls back, rallies, it even gets rejected right there to back test the bottom of the zone, and anytime, almost every time that it is broken $5, it is ran straight to $8.14 almost every time. Straight up, straight down. Yeah, there was a couple of times where it did stuff like this, but like that's like one time, breaks it, spring, run, 814, back test it again, and it goes insane. So I love it at this price right here. The other thing is you've got undeniable Class A bullish divergence on the daily, on your MACD. You don't quite have it there on your relative strength index yet, except for you have some in development right here, but that's like really minor. I would be wanting what I would like to see this asset do again would be, a little bit of a run, pull back, confirmation low, but make a slightly higher low on the second low, which would then again, a little bit of the RSI, pull back, make bullish divergence, and then, run. First target, aggressive price targeting on this asset would be, your B level, but that's not a 3-to-1. So I just, right there at the inflection zone is where you would want to target. So, the bottom of it, 760, that's 3-to-1 risk reward right there. Not at this level though. You would have to wait for it to come back and test the zone. After that, your C point, which, you know, again, wick high from back in October, wick low from right here in May, initial candle high close, you know, back test right here. So pretty major level, that is 950, and then after 950, 1170. So I think that as soon as you get up there around that 950, I think that's when you could see, you know, 1250 real quick. Because I think by the time this asset gets up there, you know, Bitcoin will, you know, hopefully be doing really well. And yeah, so, but again, it all depends on Bitcoin. And, you know, unfortunately, a lot of these assets depend on Bitcoin. You know, there is those like outperformers out there like Luna and like some of the other ones that just run no matter what, but really good. I would throw this one on your watch list if I was you. The other one that I really like, Near, NEAR-USDT. This is a bullish bat pattern, terminal price bar, momentum shifting structure, a little bit of a reaction, coming back to, you know, to hopefully test the top of the zone for the confirmation low. Again, real strong asset, outperformer. You know, it's crazy. Some of these assets, even since July, you know, when the rally kind of turned around, I mean, they've appreciated, you know, 747% at their high. So, but yeah, this is a major level of inflection here. You can see right here, I mean, initial, you know, highs from back here in March 2021, but just, you know, tested as resistance again, before selling off and going into the crypto winter. Once it broke it though, you know, big moves every time it has broken it. So this is really interesting here. You know, you have the big rally, the dump, you know, find support, rallies, gets rejected again. So you have, you know, a lower high, you know, to come, break it, rally, back test. So you have a spring back test. When it tries to back test it again, breaks it, attempt. And so, you know, this level right here, anything above it, I like, anything below it, I don't. So, but I would throw this one on your watch list as well. Bitcoin. It's just not doing what we need it to do. Unfortunately, as you can see from the 4-hour, you know, it's just flirting with this inflection zone, you know, 57.4 to 58.352. And it's tried to break it, you know, up thrust yesterday, or what is that, a couple of days ago? No, that was today. Up thrust yesterday or today, but just couldn't hold and dumps again. So just unfortunate. And then you know, you've got a falling, broadening formation, broadening structure. So, you know, this could be working on a partial decline. Again, you know, you've got your 50-day moving average here. So we'll just have to see what happens. But unfortunately, you can't really be bullish on Bitcoin until you get above that level. You know, that right there is huge. That level is everything. That is your initial candle high close back here in February of 2021. So, but I do think it will get back above it. I have faith. You know, it's losing negative momentum on the daily. You know, unfortunately though, what can happen in these situations is it can break the zone, run up to make a lower high than the previous high, and then just bleed out and dump again. You know, if we go back to the big major dump, that's pretty much what happened. I mean, you know, this is like so fractal right here, you know, so like you had your first rally, which would be down here, your second rally, which would be here, and then your all-time high, and then your big dump, which would be this, you know, so it's a very homogeneous, very fractal market. And so, you know, this right here is like this right here. So you can see how crucial it is to get back above that level. If it doesn't get above that level, it's gonna see some disgusting dumps. And below that level, straight up, straight down, straight up, straight down, straight up, straight down, straight up, straight down, straight up, straight down. So we'll have to see what happens. I still think that over the course of the next couple of months, if Bitcoin can get above that level, I think that we are ultimately working on this right here. You know, the major AB equals CD pattern, which could take us up to, you know, 87K. But it has to do what it needs to do first. Has to get back above there. So, Ethereum, on the other hand, though, unbelievable. Unbelievable. Like, it just is undeniable how strong Ethereum is. You look at the weekly, like, such a poor weak sell-off, you know, before creating an indecision candle and, you know, and then painting another bullish candle. So this right here could be, you know, tweezer bottom right here. But you technically could have like a, I can't remember what they call that, like a evening star or something like that. But yeah, I think Ethereum is going to outperform Bitcoin by a large margin over the next couple of months. You know, the oscillators are reset. Everything looks primed for Ethereum to continue its leg up and continue to see higher prices. So, you know, it just is spending a lot of time around this around these levels because they're major levels. You know, previous all-time highs and a lot of stuff going on. So, if there's any assets you guys want me to look at, you know, let me know. Gladly look at them. Let's take a look at. Let's go through some of the previous trade setups. Look at Alpha Omega Semiconductor, just like unbelievably strong, guys. I mean, this was a trade setup, just so beautiful, and it just kept going. I mean, it's that isn't, you know, that great looking, but overall, guys, I mean, this asset has been incredible. I mean, incredible. I think I set it out originally right after the confirmation low, like $24 or $25. And, you know, it messed around for a little bit, you know, it was bull flagging and stuff like that. But once it started going, it just kept going. So we'll have to see what happens from here. Obviously, this is not a strategic asset at this point. You don't really want to take any action on this, but, you know, just bask in its glory. Some of the ones that are really bummer, 22nd Century Group stopped me out. Everything was looking good. I thought we were gonna do something here. Unfortunately, though, the market just didn't pan out, and that's okay. You know, that's what happens in trading. As long as you have proper risk management and risk to reward, you can lose trades like this. So anything below 276, absolutely hate it. You know, it could pivot here, sure. You know, 244 has acted as, you know, support previously. But it just, you can see, I mean, so much correlation to that 276 to 291 level. And that's where the magic can happen. So anything below that, I don't want it. SSYS, Stratus Aerial. This is one that I still am. I still like it. Unfortunately, though, it broke the inflection zone to come back and test the 200-day moving average, but this was beautiful. But unfortunately, I didn't really even get in until we broke the zone, and then I took a little bit of profit at the first target, 33% of my position off the table. But you know, it's just been dumping. I unfortunately got stopped out on this one as well. So scanning these markets right now, guys, is essentially watching assets like rollover and continue to dump. Everything's making lower highs than the previous major discernible high. Everything is, you know, just painting bearish engulfing candles. You know, no strong follow through price action. Everything's just looking really rough. Tesla same thing. Big bearish engulfing candle. Lower high than the previous discernible high. I think Tesla, you know, if it follows the rest of this market, I mean, where is it going to go? I mean, look left. I mean, it's back to 900 bucks. If it can't hold here, it's in some serious trouble. So, let's see. Well, kind of a bummer, guys. I mean, nobody wants me to look at anything, huh? All right, that's fine. Make it easy on me. Digital Turbine, this one was super disappointing. You know, it had an insane rally off of the reciprocal AB equals CD pattern. Inverse head and shoulders, broke the previous high from back here. And insane, you know, hit first two targets before rolling over and absolutely getting crushed. And it's probably headed back to 42 bucks. That's probably the area it'll stop at. Penn National Gaming is another one that I made a video on that same thing, you know, just lower high than the previous high. I mean, that was not really the asset's fault because right here it looked really good, but that Jack Dorsey, you know, conspiracy came out, and that article that he sexually assaulted somebody or something, or not Jack Dorsey, Jesus. Sorry, the guy that owns Barstool Sports before dumping. So, Turtle Beach just broke some pretty critical support today, which is a bummer because it was looking really good. But guys, when you start to get like these, like, you know, you make a rally, you get rejected, you dump, and you make an 88.6%, like that's an 80 to 90% retracement from the high to low. And then, you know, you start to get those momentum shifting structures, like you get the first low, the head, and the second low. You can have more than one, you know, shoulder. You can have complex inverse head and shoulders like that. So everything was looking fine right here until it just rolled over and continued to bleed out and then broke support. And now the next level is literally $19. So, you know, if it doesn't find, you know, if it doesn't have strong follow through here and pivot to get back above, you know, 26.47 or at least 25.70, you're probably going to see 19 bucks, which is a bummer because Turtle Beach is one of my favorite stocks. I mean, I will acquire it down here, but nonetheless. Donut, let's take a look. Yeah, I mean, this kind of reminds me a lot of Robin Hood almost. You know, it would be nice to get like a double bottom. Yeah, if it can stay above, you know, 1283 at the minimum, then I think it could be okay. You just, you know, there's just no demand, you know, for a lot of these assets. There's just like, it's just no strength in any of them. You know, such bad volume, you know, in comparison to back here. So, and your highest amount of volume is, yeah, on the dumps. It's bad. You know, low volume on the rallies, high volume on the dumps, distribution. But these are your low risk areas. I mean, these are the areas that you want to buy assets at for sure. Let's see. Polygon Magic. What's the ticker on that, Jonathan? Polygon. What is that? Is it? Oh, Matic? Are you talking about Matic? Sorry. My bad, bro. My bad. Matic, yeah, okay. Matic's been so strong, man. Unbelievable. Unbelievable. And why? You know why? Why did it do that? Look left. I mean, you can see anything above here is great. You know, 125. Back here was like the trade setup. You had a rally, and then you had the dump, the big dump that was back in September. Then you broke critical support. But look at the follow through price action. Immediately after, stayed right back at it, broke it, back tested it as support while also back testing the 200-day moving average at the exact same time before absolutely going insane. So Matic looks so good right here. The problem is now you're up 10% today and you're sitting right at a resistance level. Like you're sitting at a major level like that, you know, right there, that wick high from back in, May 2020 or May 2021, initial all-time candle high close. Like this is unfortunately high premium for shorts. But with that being said, if you break this level, if you break that, previous high, you can see what it does. I mean, you can see right here, it breaks, finds support. I would probably put that there. What are we at? Oh, never mind. We're on the 4 hour. Jump over the daily. Where are we at here? Here we go. Okay, so we'd have to mark it on the 4 hour, but you can see, I mean, it once it that candle high close right there on May 17th, indecision, that's like a 3-bar play, and then it goes straight to 270. So there's no value here. These aren't really necessarily assets I like or areas I like to buy stuff at, unless there's like a certain technical setup. And unfortunately right now we're just kind of going straight up. But you very well could see 270. That would be the next area to target. The time to be buying this asset was back here. Back here when it had the rally, pulled back. Even created some type of like M formation. I mean, kind of like a bullish bat pattern almost. A little bit too deep, but those were kind of the levels. And even better yet, back on that spring back test to spring right here. So I think Matic could keep going. Yeah, absolutely. I think Matic could, easily see all-time highs and beyond if Bitcoin can get back above 58K and continue to run. So, let's look. Some of these just crazy like NFT coins. Let's see. Oh, this was a trade setup that I sent out like maybe a week and a half ago. KNC. Still looks good. Still looks fine. As long as it can stay here above 185, no problem. I mean, in reality, it could dump all the way back down. And as long as it makes a higher high than, 163, it's fine. Ideally, I would like to see it stay here above that 185, but, we'll just have to see. But, I mean, right after, I sent the trade setup out, like, momentum shifts, left shoulder, head, right shoulder, break support, immediate fall through, rally, back test, and then just took off. So, I think KNC could see much higher prices. Like, that's like that 265, 278, like that's where KNC could absolutely be going in time if Bitcoin can stay above that 58K, if it can get back above the inflection zone. So if it doesn't and Bitcoin, dumps and continues to roll over, then yeah, all of these are probably screwed and all of these are probably going to continue to dump. But right here, I like it. I love it, actually. This was one I took. Storage was awesome, you know, like just showing insane amounts of reaccumulation here. And as soon as it, you know, got back above $2, it straight up. I mean, look at Storage anytime it's gotten above $2. Straight to $3.28 at the minimum. So, but can't take action there anymore. Let's see. I still think FIL has a chance. This is one that I've sent out a couple of times. I have a big, you know, pretty big position in it. What's up, Matthew? How you doing, bro? But it just hasn't been able to catch the bids. You know, it just, unfortunately, there's just not enough demand at these levels. For some reason, you know, technically the asset looked really good, but it just didn't catch the bids like a lot of the other assets did. So, but it's still a pretty big position for me. You know, until it breaks, you know, honestly below that 48, that's where my stop's set. My stop's set like right around $48.10 or something like that. So I think if it can hold above this long enough and Bitcoin can turn around, then I think FIL could go insane. You know, I mean, it's a powerful asset when it catches bids. You know, you can see here, I mean, just, when you look left, a lot of upside on this asset, a lot of upside. You know, playing the major structure, like the major bullish bat pattern, you know, yeah, you had your first low, second low, but even if you pulled this, you know, pattern completion zone, oh shoot, even if you took the pattern completion zone over here, I mean, first low, second low, type 1 return or type 1 reaction, type 2 return, and then type 2 reversal, that's when your major, you know, rallies happen. Like, you know, that's when the magic happens. So until it makes a lower low than the previous major discernible low here, I don't mind it. Cardano, unfortunately, I mean, it looks good. Potentially. This is a perfect example of an asset that has no demand, but is technically setting up at a major level. These are like your low risk levels here, but that's why I don't like taking trades on the first initial low. I want to see a reaction and then a confirmation, because at these levels, nobody knows what's going to happen. Like, you know, nobody knows that the bottom is in. Everybody thought the bottom was in here, and it wasn't. You know, everybody thought the bottom was in here. So it just, until you get like clear, concise confirmation with like undeniable bullish divergence and whatever else, you don't want to take this trade. But I think we could see Cardano make some insane runs right here, especially, you know, the falling wedge, down sloping consolidation, you know, textbook, you know, bullish Gartley at major inflection zone. You know, you've got your wick high from here in February, highs in March, April, you know. So I would put Cardano on your watch list and, you know, just kind of, you know, see what happens. What's up, Alan? How you doing, bro? It's good to see you too, man. Let me show you. So this right here, Bit Mining Limited, I kind of like it. I kind of like it right here. I think if we can get above $8, I'll like it a lot more. But these are like the most low risk levels that, you know, you can get. Like these are areas that you want to take trades in, because you just, it's high premium for short traders. Like, you know, this is like value for longs and high premium for shorts. There's not much more room that they've got to the downside. They will make more money going to the upside. And if you look here, the 618 is confluent with the high of the structure. The 382, let's see here. What am I doing here? Yeah, that's on the return. But, it made a 90% retracement after the big rally. Let's take a look at where it's at now on the downside. Sorry. So yeah, the 50% retracement, excuse me, confluent with, this back test wick low here. There's some, a lot of areas that correlate to that level historically. But the 382, again, with the top of the structure, wick low down, wick high, candle high close from here back in January, here in March, January 2018, this area right here, a lot of correlation there as well with the top of the structure. So I think above $8, like this asset could make a lot of moves. I mean, it could do really, really well, especially if Bitcoin continues to outperform or, continues to do well and continues the uptrend. Obviously, if Bitcoin breaks down, this asset's probably just going to roll over and continue to dump and fall back down to $3.71. But if it doesn't, it can make some moves. Bullish divergence on the MACD. RSI is at 43 right now. Again, this is why you wait for confirmation lows, because you could take it here, it could make a lower high than the previous high and dump again. So I would throw BTCM bit mining on your watch list. I love stuff like this after you get a big rally, a drawdown, and then you get a harmonic that forms at a deep retrace of the previous structure. So the other one, CRISPR, I really like this one as well. That's textbook there. Look at that, 786. A little bit deep on B, 64% retracement instead of 61, but who cares? Look, pretty much confluent with the 1414 on your BC projection right here. And your pattern completion zone is at a major level, like major level. That was once serious resistance, but once it broke it and used it as support, it went literally parabolic. It went from $78 to, $200, up 180%. So CRISPR therapeutic company with the new variant, who knows? Maybe it could turn here and pivot, but again, we want to wait. So, but look at the divergence. I mean, clear divergence on significant timescales. 3-day, weekly, your negative momentum is waning on the weekly. Bullish divergence on the MACD. Unfortunately, you haven't quite turned on your relative strength index, but you are in the oversold. You are technically oversold. So I really like CRISPR here. Now, the whole market looks trash, and so it very well could just break through that level and just keep dumping, or it could pivot here, have a really weak rally, get rejected at $100 and turn around and dump again. But how would you size this up? Really easy. Really easy. That's why I like trades like this. You set your stop loss marginally below the inflection zone. And if you take a look here, where's 3-1? Right there with a relatively loose stop. Sure, you could, you probably want it marginally below the D point, but I mean, to get 3-1, really easy to size up. A lot of upside. Your second target, would be at the top, the previous level, and then your third target would be up there. So CRISPR looks really good, guys. If it can pivot, if it can turn, get some bullish follow through, give us a confirmation. That would then reset your 200-day moving average. It would get you back above it. Your moving averages are pointing up. A lot of the other structures we look at, they're all pointing down, you know, they're all rolling over. So something to keep in mind. This was another one I was looking at, but I don't even know the name of it. RPC. RES is the ticker. This is what I was talking about, though. Like, you know, major rally, pulls back, loses 90% of its value, you know, from here to here. 100% of its value. Same thing it did right here in March of 2009 before going insane. Now, you know, some could say you're on the other side of the fence, but when you're on the other side of the fence is when you get like a fast, insanely explosive rally and then a fast dump, and you know, you're in corrections for years and years and weeks and weeks and weeks. But like, I mean, this thing's been correcting for 1,300 days, so I think this thing could do all right. You know, you're in an undeniable uptrend. You know, M formation, Gartley, that's probably what it was. I don't really remember. Type 1 return or reverse reaction, type 2 return, and if you can hold here, you know, I think it's a decent trade. Vecco was one I wanted to look at. So I don't even really know what this company does. I think they do like semiconductors and stuff. Ticker symbol VECO. Let me show you why I like it. I think if this thing can get above $30, I really like it. Anywhere from 30 to 34 bucks. Really, if we can get above 34. But 30 is your initial high, like your initial all-time high. You've got a lot of correlation to that area, and you can see what happens above 30 bucks. I mean, a lot of upside here. So this is a lot like SSYS, very similar type stuff. You've also got a huge harmonic here, but it, you know, didn't play out at dumps. So momentum shifting structure. I mean, after a huge extended dump, you know, making a higher highs and higher lows. You get the rounding bottom. You know, confirmed double bottom. This is reaccumulation right here. Like, this is really good looking stuff. And now you're, you know, above that 26 and you're back testing it. So, you know, you close the gap with the wick. If you can hold here, I think you've got a lot of upside. Bullish control zone on your relative strength index. Actually, not quite. What is that, 51? Yeah, not quite, 51. So, have to see what happens here. It's either going to pivot and keep going, or it's going to break down. But I like the rounding bottom type stuff, double bottom. Well, we've been on for what, hour and a half? Anybody have anything you want me to look at? If not, my mom's blowing up my phone right now because she needs some help. I will probably get out of here. I'm starving. This thing was really good. Like, when I sent this out as it was trying to test the inflection zone, I think if Billy would have broken that, this thing would have gone insane. But you know, and it's still okay. It's still fine. You could absolutely be working on a triple bottom right here. It could be in this range. You know, and right now is your low risk areas. Unfortunately, you're kind of breaking your trend right now, and it looks like it's in trouble. I mean, it looks in trouble. I mean, this thing could go right back down to 36 bucks super quick. That Roblox. That was crazy. This one was a So nice, guys. I mean, jeez. I can't believe Roblox did what it did, but now it's like, you know, get wrecked. Get wrecked. Like, to think that there's literally people that bought this asset up here. Like, there's literally people that bought this thing at $140. Just know that. And they just got absolutely destroyed. So, well, speak now or forever hold your peace. If you want me to look at anything else, I appreciate you guys watching. And I'll see you guys in the next one. Jonathan, it was good to see you. I haven't, heard from you in a long time. We're gonna start streaming a lot more often. I'm gonna try to. I've got a couple segments and stuff, a couple video ideas that I'm trying to work out. But we're gonna, get back to posting a lot and streaming, every week. So, but that's it for today, guys. Thank you. I love you all. Peace.